Hi, I'm Chris Hale and welcome to the Earnings Corner. Dixons Retail, who owns Currys and PC World, have seen their like-for-like sales increase by 4% for the year up until end of April. Trading in southern parts of Europe though has seen sales drop by around about 8%. The likes of Greece, Turkey and Italy in particular have seen these sales fall. Now it's no real surprise because these economies in general have struggled in the last couple of years. In terms of disposable income, people in these countries just don't have it. They're not going to spend their money on luxury goods like laptops and computers and just in general smart TVs. So that's one area that could in the future, when these economies start improving, they could see their sales improve again. Their underlying pre-tax profits are expected to be at the top end of estimates, between 75 to 85 million pounds. For me, I could see them just pipping this. The fact that Comets went into administration at the back end of last year was great news for Dixons Retail. They had a big Christmas rush in sales, and for their revenues this will be great, and going forward they pretty much have a monopoly on the market. Although their website sales were down 24%, again for me I don't see this as a big problem really. If I'm going to buy a luxury good, or if I'm going to buy a laptop computer or a Hoover, I'm generally doing it because I need it. It's because mine's broken and I need it straight away, so I wouldn't necessarily buy it online. I would more than likely go into a store, buy it there and then so I can use it the following day. One area I could see an improvement for them is their stores. For me, they are very outdated. If you walk into a Currys or PC World, you just feel like you're walking back in time. If you compare this to the likes of Apple, you walk in and it feels different. You feel part of the experience. You can play with an iPad, iPhone, you can play with anything in there. And if you want to buy it, one of the store members will come up to you and literally take your debit card off you there and then and whiz through your receipt through to your email address. This is an area that PC World especially could learn from. Now, the share price, the last year or so, if you look back in June last year, it was just under 13 pence. And since then they've seen an upward trend all the way up to just under 39p at the moment. Will this continue? Possibly. If they start doing some initiatives in their store, we could see an upward trend continue. For me, are they a buy, hold or sell? I really can't say. I would possibly say out of the three, a buy up until around 40–45p, but possibly no more. Thanks for listening.